There is a glaring detail in the CPI data that came out today, and I want to know, did you see it? Honestly, I think it got overlooked by a lot of people in the markets today. It was received well. However, I didn't hear anybody talking about it. I didn't hear anybody who happened to mention it. It was the very first thing that I looked at, and I can't believe that a bigger deal isn't being made about it. I want to tell you about that detail in this video today and show you what I'm seeing, because I think it has a very big significance that, like I said, has gone overlooked and most definitely deserves not only my attention, but your attention as well. So I want to get right into it. So towards the end of this video, I'm going to tell you about how you can get 15 free stocks from Moomoo. But for right now, I want to show you what we have in the CPI, and we'll see if you can catch on to that detail with those eagle eyes of yours. So while we're looking at the CPI that we have here, yeah, you probably saw that we had the headline number of 0.1% month over month for March. That was good. I think the market responded immediately favorably to that number, where consensus was coming in at 0.2%. Energy really helped it out. If it wasn't for energy for that, I think we would have seen a significantly higher number for that. So that did give us a headline year over year number of 5% before seasonal adjustment. So I think that was really good. I think a lot of people saw that one. Let's move on, because that's not the detail that I think that you should be paying attention to. As a matter of fact, the entire market should be paying attention to it, and more people should be talking about it. So let's have that conversation start here. So the index for all items, there's 0.4%. This is core. This is less food and energy. And that one comes out to be 5.6% over the last 12 months. So those numbers, strong numbers for us. The market reacted favorably, and if it wasn't for the Fed minutes coming out and mentioning the word recession, we probably would have ended the market green today. But this is not about FOMC minutes. This is about CPI and the detail that I really think that we should be paying attention to. So let's go down here to this table, and let me scroll up a little bit more, because I'll give you a hint. If I didn't scroll up more, you would miss it. So when you look at this table, you have for all items, there's your 0.1% for March. You have your 5% year over year number that we have a seasonally unadjusted basis for all items. And then when we come down to this part of the table, we have 0.4% month over month, 5.6% for the 12 months ended March 23rd for a core. And as you look down through, so we know that services, less energy services, has been higher than we want it to be. We see it come down to 0.4. We're like, hey, that's pretty good. It hasn't been that low in a while. And then when we look at shelter, we see that coming down to 0.6. And we saw that it was 0.6 back in November. So, hey, maybe we're seeing a little bit of weakness there. So when you look at this, there's a lot of numbers, and sometimes you miss some of those details as you look at it. So what I want to do now is jump over to the chart. So here, this is the month over month view that we have of the CPI for all items. And when we look at this, you can see instead of this upward rise that we've had all the way going back from April of 2020 up until we hit June of 2022, and then when we bottomed out in July following such a hot read up there, that set our new path for us and our new trend, and we're still on that. And so that is good, because it sets up for us a lower trajectory for CPI. Now when we go over to core, this one, we have more of a narrowing where the bottom is rising up, sort of flattening out a little bit, but not bad. And we also have a narrowing across the top, so locking us in right around that 0.4 to 0.5 range. And we came in actually under 0.4 just by a little bit, but it does round. And that actually is just a little bit lower than what we saw in December, but still higher than we saw in November. Not bad. The market knows that. I don't think people miss that detail. This next tab, I'm going to click on it. This is really a large part of what I think people are missing. So when we look at services, less energy services, when you look at it in a graphical sense, you can see what we had leading up to the pandemic, and you can see the rise that we've been on. But really look at what we have. Ooh, maybe that's not as good. There we go, right there. We have, for the first time since July, a lower low than the rest of what we have in this trend. So just as though we were reading a technical analysis chart that we were looking at for stocks, you can read this in the same way. The fact that we broke down and broke out of that trend that we had right there, that is a really good sign for us that I think that we're starting to see services not only peak, but start to come down in their rate of growth. And so I think that's very important. You can see even more so when you look at shelter. So this is shelter services. Look how low we've dropped for this one. We've significantly broken this trend that we were on, and this doesn't mean that we won't pop back up, but I think it is important that should we go back up from here, that it doesn't come back and retest these highs that we've had up here in the charts and see those rampant rates, because that would cancel out sort of the path that we're on. But this is a very good sign. The market should be paying a whole lot more attention to the fact that we've come down so significantly low. If we would have stayed up around where we're at and been even, it wouldn't have been as good. If we would have gone up, back up a little bit higher, we would have still been on the same path. This is very important that we see that happening. So we really now want to see April's numbers come out in May. Unfortunately, I think it's after the FOMC meeting. I believe that's May 2nd and May 3rd. Don't quote me on that one. I need to check it. But we do want to watch those CPI numbers when they come out for May, for April's numbers, especially if it continues this trend. If we get another month downward, or we just pop back up a little bit, starting that new movement that we have, a new trend, I think we could possibly start trending downward. And I've been saying on my channel for several months now that I think that June is that time that we really start to see big differences in inflation. You could argue that we're already seeing it now. One number doesn't make a trend, and Jerome Powell has said that, and me being somewhat of a statistician myself, I am a mathematician by trade, I can tell you that that is in fact true. A trend is a pattern over time, and one number doesn't make the pattern. So if this is a one-off, it doesn't happen. But when we get April's numbers, May's numbers, that's 3 different sets of numbers by June. June's numbers, which come out in July, that's really when I think not only see the big numbers year over year really start to drop hard, but I think that we also start to see month over month settle a lot more from where they've been at so far for us. So that could be very good for the markets, and it could also ease some of the pressures off the Fed for showing that, hey, inflation is cooling down significantly for us. You don't have to be as aggressive. You can, and most likely by then, right now the market's already pricing in a pause for that. As a matter of fact, let's go ahead and look and see what we have on the CME Fed Watch tool. So let me see if this will zoom in nicely for us. All right, so there we go. Those numbers should be a little bit bigger for you on screen. 62.5% likelihood of a 25 basis point hike in May. And the markets, I believe, are already pricing in that rate hike, but I think that they're also pricing in a pause for June at the meeting, that there's no further rate hikes. And then there's also a meeting in July that follows that could be the same thing, where there's no further rate hike. As a matter of fact, if we see significant pullback, like I expected is possible, that maybe even the Fed, maybe they do hold higher for longer. Maybe they stick to their word and keep that pause there. Really, I think that thing that would cause them to break their word and really start cutting rates rather than holding steady or increasing them is if we have significant signs continuing of a weakening economy, that we start to lean more into recession. So that's something that we absolutely want to be aware of and want to watch for. So this is what we want to see right now. And just to show you the end of the year for the 13th of December 2023, right now the market is already pricing in up to 3 rate cuts from where we expect May to go. If May goes up to 5 to 5.25%, right now it has us at 4.25 to 4.5% for the federal funds rate. So we'll see as time goes on if that plays out. And honestly, like I said, if the economic indicators keep showing signs of economic weakness and contraction, we hear Friday is going to be a big day. It is just plain out, flat out going to be a big day when we start hearing from the big banks. BlackRock, JP Morgan, Wells Fargo, Citigroup, they'll all come out, they'll talk. And if they're all singing the same song of a huge economic weakness coming for us, or maybe it's mild, maybe it's a very strong economy coming for us, anything that they say for that guidance is really going to impact what we see going forward from here. Should we hear a lot about recession, see a lot of signs of weakening, that's good in that it can cut the federal funds rate. However, that could also mean that they're being cut because of economic weakness, because we could possibly be experiencing contraction, 2/4 of which means that we are experiencing a recession. So just things to be aware of as we go forward and talk about that. So the last thing that I want to leave you with in this video prior to closing up is that tomorrow at 8:30 a.m. we get PPI, which right now consensus has at flat, at even from the previous month, which previous month was down 0.1%. So we'll see if that gets revised on us, revised up, revised down, staying the same. And we'll also see where that consensus comes in. If we keep singing that same tune for PPI, maybe we do come in at that value. Core PPI coming in at 0.3%. This is still an area where we want to see that 2% target inflation. So anything around that 0.3 or lower is going to be pretty darn good for us. So we do want to be on the watch out for PPI as that report comes out. All right, I'm going to leave you go with that. If you guys like my commentary and like to hear more, please consider joining my Patreon. You can find the link for it down in the description. You get access to my Patreon exclusives, including my Tesla stock price prediction through 2030. It is available over there right now at the Patreon. You can click sign up and get access to all my Patreon exclusives. I'll be putting out the video giving commentary to that stock price prediction as well. Also, I said that I would tell you about how to get the 15 free stocks from Moomoo, and here's how it happens. So all you got to do is find the link for Moomoo down in the description, click the link, sign up, and you can get up to 15 free stocks using my link. And there's even mention over here about a $1,500 cash coupon. So I'll tell you about that in a moment. Here's the free stocks. You deposit $100, you get 5 free stocks and access to their free premium courses. Why not take your trading game, your investing game to the next level? They have their stock screener is amazing. The technical analysis that they give is incredible, and it goes cross-platform. So the things that you do on your mobile device, for example, you can carry those over to your desktop device as well. So I do a lot of the big stuff on my desktop, open it up on my phone throughout the day, check and see how things are doing. Did they hold support? Did they break support, break resistance, hold resistance? Whatever it might happen to be. Are my stocks up, down? What's going on in the stock market? You can find all that through the Moomoo app. If you make that deposit of $1,000 or more, you get 15 free stocks and still access to those free premium courses. It's a wonderfully easy and useful tool with just an insane amount of depth. So the promotion, the $1,500 cash coupon, there's a paper trading competition going on right now. Up to $1,500 in cash coupon means that they will deposit that to your trading account, and you also get 1 month of Bazinga Pro for free should you be the winner of that competition. And you can find out the terms and conditions, and you can join that again using my link down in the description. So thank you guys very much for watching this video. I hope that you liked this video. Slightly different format than my others. If you'd like to hit that like button to show your love for this video, I'd certainly appreciate it. Hit that subscribe button to see more of my videos and ring that notification bell to be notified anytime that those videos come out. I am Dr. Stock, Doctor of Education. We'll see you in the next video.